13% move in SPY today. This is one of the craziest days we've ever seen, so I wanted to do a video on it. S&P opened up um, super low and sold off a little bit from the open, and then some fake news came out that Trump was reconsidering tariffs and considering a 90-day pause on tariffs. That sent the S&P and the Nasdaq, everything risk, way higher. And then shortly thereafter, White House came out and said, nope, it's all fake news, and the S&P gave it all back. This might not look like a lot, but considering this move was almost 9%, and then when it sold off, down 5.5%, that's, I think, the biggest intraday swing that I've ever seen. And even these smaller moves are pretty large. It's a 3% move. And keep in mind the long run average for the S&P in a year is 8%. So the volatility we're seeing in equities is pretty astounding. SPY closed just about flat. Nasdaq closed slightly green, up 0.2. Dow Jones closed down 1%. IWM closed down 0.9%. Equal weight S&P closed down about 1%, 0.8%. Mag 7 closed slightly green. Dollar closed up 0.5%. And the real, we'll go over spreads, bonds, currency, kind of quick recap. But the real move today, in our opinion, was the long end of the yield curve. So we'll go to daily to really illustrate just how crazy this was. We were talking over the weekend in the weekly recap about growth scare, kind of the worst growth scare that we've ever seen, or that we've seen since COVID, when a kind of global pandemic was gripping the global economy. Well, in the midst of that, the 10-year, the entire curve, yields went up today, which we think is really the notable story today. Sure, S&P and risk and equities had pretty tremendous volatility, but this is what is sort of scary. Now, of course, when it comes to with tariffs, there's a lot of talk, and I mentioned it too, that bonds could be weaponized. And I know there's some people talking about that right now. I would say that the dollar did not sell off on the day overall. Overall, the dollar closed up, but overnight, the dollar was down. In Asia session, I was watching since yesterday, the dollar was selling off, and yields opened up way low. Yields opened up down here, and they basically just went up the entire overnight through today. They basically just went straight up. And during that kind of Asia session, Sunday evening for the US, the dollar was selling off as yields were rising. What that indicates is capital rotation. So clearly, NASDAQ futures, S&P futures were down, since futures opened yesterday on Sunday. So stocks down, bonds down, yield up, and the currency down. That is capital rotation. So we're starting to see that. During kind of American, the US session, we did not see that. The dollar was pretty strong through the US session, but we think that kind of Asia session action was notable. This was Asia session over here. So yeah, we think that that was partly a capital rotation story, but also the curve is steepening pretty significantly. So this is the 10-year, 2-year spread, and we can see that it actually closed at a high. That the last time it was at these levels was May 22, when inflation was rocking the U.S. economy. We had record issuance, record treasury issuance, and the curve is back to being as steep as it was back then. And the fact that the 30-year 20-year, 5-year, 10-year, everything. The 10-year was up like 30 basis points today from the low. This is a 10-year, yeah, 35 basis points. That is an incredible move given the kind of growth issues that the kind of this new global trade war is causing. The fact that the 10-year yield is up, and especially that's up 35 basis points. It's not up 5 basis points, not up 10 basis points, it's up 35 basis points. This is a daily chart. So you can see, just look on this chart and try to find another time that there was a move that big in yields. So yeah, we mentioned that the dollar was selling off along with U.S. equities and along with bonds, yield up in the Asia overnight session. But then during U.S. session, it was the dollar was showing strength and was getting bid. We think another notable thing is that in Asia session for Sunday, the dollar, like we mentioned, was selling off. And what, I said futures were down, I think 4.5% on the S&P, at 1.5%, I think, for NASDAQ. What was getting bid was gold, the Swiss franc, and the yen, not the dollar. The dollar actually was getting sold. So the safe haven bid was not in the dollar. Sure, rates opened up lower, but basically sold off from open. And so we think it's notable that the safety trade, or the safe haven trade, was not the dollar and not treasuries. It was the Swiss franc and the yen. We think that's super notable. And of course, across the curve, the story is the same across the curve. These moves are just incredible. Like, I don't think I've ever seen anything like this. 30 basis points on the 30-year. So we think that this is clearly a capital rotation story, going back to the start of during Asia session, capital rotation story. But then we think during today, part of the reason rates are up so much is the fiscal concerns that we've kind of been talking about on X for a long time. And we have some auctions coming up this week. I believe it's a 5-year, 7-year, 10-year, but don't quote me on that. But we'll definitely be watching those. It's important to note the deficit in 2025 is actually higher than last year in terms of issuance, treasury issuance. And it's also higher than in 2022, during fiscal year 2022, when there was this like record stimulus going on. So we think that this dynamic where rates go down during a recession or rates go down during a growth scare might not be what happens this time around. If we do indeed go into a recession, we've been saying on X for a long time that rates on the long end of the yield curve could actually go up. And we think this might be the early stages of that. Given how severe this growth scare is, the fact that rates moved higher by this amount is definitely something to keep an eye on. I did want to also mention spreads, because we had mentioned that in the weekly recap. This is the LQD over HYG on a daily basis. Easier to see here. Spreads started to come in a bit, but we think are still headed higher. We think spreads are still going to widen from here. The B of A spread, B of A high yield options adjusted spread. This was still Friday. This hasn't updated yet. LQD over HYG is another kind of proxy for a way to measure credit spreads. This is high grade investment grade corporate bonds over junk bonds. And spreads started to come in a little bit today, but we think that generally speaking, spreads will widen from here. We had also mentioned implied correlations might be a good signal on timing the bottom. So we'll go over that. Implied correlations came in just a touch. They closed basically where Friday's close was. And so, yeah, we're not sure that this is the bottom. We do think that the story overnight was notable, where safe haven bid was Swiss franc, yen, and gold. and not U.S. Treasuries or the dollar. So that just kind of furthers our belief that there is kind of a broader story of U.S. exceptionalism fading, capital rotation out of America. We know the net international investment position is negative 80% of GDP. Foreigners own a ton of our assets. Once we start being hostile to them, they could start to repatriate those assets, and it could cause a major headwind for basically any dollar denominated asset. We still think that that's kind of the broader story. The MOVE index, we had also mentioned this, something to keep an eye on. I'm not sure if this is just a data error or if it really did just close, given the moves that we were just talking about, if it really just closed where it was on Friday. But yeah, this is something we'll continue to keep an eye on, especially with the rates doing what they did today. In the midst of a growth scare, like we have equities down, 1.4.5%, and rates are moving higher, and we should also point out that from Liberation Day, the 10-year is down like 7 basis points. I think Liberation Day was actually the 10-year yield is actually up slightly, ever so slightly, by 1 basis point. The 10-year is actually up. So after the largest tariffs in 100 years were announced, long bonds, the yields are actually up. So again, yeah, this we think is like the big story of today, not the equities. Although of course that's that the moves we saw in the S&P and QQQ were pretty wild. I will point out that it did bounce. I didn't add this line today. This was from the weekly recap video that I'd put a line here, and it did bounce there. But this chart still looks pretty bad. Like we're not very confident that this is a durable bounce. And I think that's it for today. Gold was selling off pretty hard today too. So that kind of gives credence to the margin call. Sell what you can, not what you want to. It still appears to be in that long-term parabola. Yeah. And Bitcoin caught a bid today too. Oil was up 1.5%. We think that the tariff story is, we do not think that Trump is going to capitulate for whatever that's worth. And that, like we said, the capital rotation out of America is kind of a broader story and will create headwinds for pretty much any dollar denominated asset. We're already starting to see that dollar denominated assets are not being the safe haven bid that they once used to. We think that's really indicative of a broader shift. And the fact that long end rates went up, given we are facing one of the biggest growth scares since novel virus causing a global pandemic. We think that that's really the story. Of course, S&P moving was pretty incredible, and spreads on options were pretty incredible, like over $1 for an at the money put, and liquidity in the order book was like super thin. And also it's worth noting too, the move that happened today was on like insane volume. So we'll go to the 2 hour. That move today, the volume was insane. I think it was like 15 million shares on SPY were traded. You can see that going back, that's just like blows any other next second closest day out of the water. There was just absolutely insane volume on that kind of reversal, rip higher on the fake news, and then the reversal lower. There was really incredible volume that came in. The liquidity today was pretty sparse though, in the order book, at least on options. And so that's probably also something worth mentioning. That's about it. Hopefully today is a little bit, or tomorrow's a little bit more calm, but we thought it was worth updating a couple things. Hope that was helpful.